Welcome to Life in Calgary, Alberta. I'm your host, Patrick Murray. And today, guys, I got some Calgary real estate news for you. We're going to talk about what's happening in the Calgary real estate market right now. And guys, I got to tell you, I can't fathom what's going on right now, and maybe you can't either, but I'll try to break it down and explain it to you in this short video. But before we do that, if this is your first time to this channel and you want to know everything there is about what it's like to eat, sleep, breathe, live and play in Calgary, Alberta, then guys, just hit that subscribe button and click that little bell so you get notified every single time I release a new video. Now guys, I've been a resident of Calgary since 2001. I've lived in 5 different cities in my adult life, but you know what? Calgary's stuck, and there's great reason for that because it is a great place to live. And not only that, but I've been a realtor here since 2010, and all of this means I have some insider knowledge about the city of Calgary and the surrounding bedroom communities such as Chestermere, Airdrie, Okotoks, and Cochrane. So if you are considering a move to Calgary or one of these bedroom communities and you would like some assistance to purchase a home, feel free to reach out to me. My information is below. Send me a text, an email, or a phone call. I will absolutely get back to you. All right, guys, let's do this. Let's talk about this latest Calgary real estate news right now. Well, right after this. All right, guys, so here we go. Let's take a look at the market stats for the end of November 2023. So right now we're in the early part of December. The earliest month-end stats we have is the end of November. Of course, December isn't complete yet. So these are the latest and greatest statistics we have for the city of Calgary. So today we're going to look at the city of Calgary. We're going to look at detached homes, semi-detached homes, row homes, or townhomes, if you will, and apartment condominiums. And we're going to start here looking at detached homes throughout the city of Calgary. So let's take a look here and delve in, guys. So one thing I'll tell you before we keep rolling here is, it's remarkable to me to see that prices are still going up. We are seeing some seasonal things that we normally see at this time of year. For example, over here, you're going to look at this listing absorption rate. That's quite common at this time of year. We see some of the action in the real estate market start to slow in the late fall and into the early winter, and then they kind of start picking up again in the spring. Normally, we would see a decrease in prices happening as well, and that's not happening. We're actually seeing an increase of prices continuing to happen. So let's get into things here. So first off, we're going to talk about benchmark pricing. So benchmark pricing is a far more stable way of talking about pricing as compared to talking about average or median pricing, because there could be an unusual amount of higher end sales or an unusual amount of less expensive sales that could skew the market data in any one month. So we look at benchmark pricing to discuss pricing. So looking at benchmark price for detached homes, you can see right here it's $699,500, and that's up 0.27% from the previous month, October 2023, and it's up year over year 13.17% from last November. Now this is the price chart here from last November to this November here, right beside under the benchmark prices graph. Anything in the dark colors here is an increase, the blue is a decrease. So you'll see we had January all the way through to August increases. We had one little blip where it went down slightly in September, very slightly. And then October it's gone up, and it's gone up again. In fact, we're looking at a benchmark price of $699,500 for the average detached home in Calgary. And this is the highest it's ever been in the history of the city. So that's really telling. And you can see here, and don't worry, I'm going to come back to this top chart on the listing absorption rate in a few moments here. But this is the benchmark price trend chart from 2014 to 2023. Again, the dark colors being increases in the market, and the blue being decreases. Now you'll see that we had a few lean years prior to the pandemic, and then things started to come up a little bit in 2020 during the pandemic, and then
2021, 2022, and 2023 really go up. And of course, 2023 is not yet complete. So this figure here is just as of the end of November 2023, but December is yet to come. So I anticipate this figure is going to be higher still. And again, you can see that, roughly 10 years ago, 512,000 was the benchmark price. And here we are, well, as of this past month, sitting at roughly $700,000. So that's really something. Now we'll continue down here. We'll look at the actives and solds here. So last month there were 1,427 active detached homes for sale citywide, and 818 of those sold. Now I'll come back to this chart in just a moment. We'll scroll back up here. So that means that the listing absorption rate was 57.32%. And again, that's because 818 of the 1,427 listings for sale sold, which is 57.32%. And you'll see that we're in something called seller's territory here. Anything above 50% is a seller's market. 50 to 30% is balance, and below 30% is a buyer's market. So we are still sitting in a seller's market right now. Now we'll go back to this chart here. So the amount of actives we had for sale is down month over month. So from last month, we're down almost 10% from the amount of actives that we had for sale last month. And year over year, we're down 9.05% from last November in the amount of actives that we had for sale last month. Now, month to month, looking at the number of solds, we're down 16.19% from October. And year over year, there's been no change. So even though year over year, the inventory is down roughly 9%, year over year, we've had the same amount of sales as there were last year. So let's look at average days on market. We see 32 days on market. Last year was 37. So kind of comparable, still fairly strong. And this bottom chart is the market distribution where the number of sales are taking place. You can see that $500,000 to $600,000 range is the majority of the sales taking place, followed by a $600,000 to $700,000 range, and that $700,000 to $800,000 range. And then the 400,000 to 500,000, 800,000 to 900,000, and then that 1 million to 1.5 million range, followed by the 900 to a million range. So that's the market distribution here. So while we are seeing a slowdown in maybe the amount of activity or how quickly sales are taking place, that's kind of a seasonal thing. We would expect to see prices starting to decrease at this time as well, but that just isn't happening. So let's look at a different part of the marketplace. All right, so now we're going to look at semi-detached homes, which are kind of like duplexes for those of you that are unfamiliar with that terminology. So now that I've explained the listing absorption rates when we looked at detached homes, as it applies to semi-detached homes, it's 51.47%, which is just into a seller's market. And that's because there were 272 listings for sale last month, and 140 of those sold for 51.47%. Now, if we look at the benchmark price, it is $628,700 for this product type. That is the same as it was last month. So even though here we're seeing this dark color going up and then this blue color going down month to month, it's the same. So I mean, I guess they had to choose the color. Is it going to be the black or the blue, right? So it's the same. So essentially, not to worry, no changes taking place. Year over year from last November, it's up 12.31% because last November it was $559,800, and here we are at $628,700. And the 10-year benchmark price history here, we can see 2014, 2015 was going up, down in 2016, up in 2017. And then those lean years went down in 2018, 19, and 2020. And here we are playing catch up. 2021 up almost 30%. 2022 up almost 12%. And here we are in 2023. It's saying 602,000, up 6.51%. Well, December isn't done, so this is going to be a higher figure still. And let's take a look here just to reinforce the listing absorption rate here again are this 272 actives for sale last month and 140 sold. So looking at the actives, that's down month to month, 4.56% from October. Year over year, it's up 0.37% from November of 2022. Looking at the number of solds, down month to month, 21.79% from October. So that's huge, but year over year, we're up 5.26% from last November. And looking at the average days on market, we're looking at 28 days, and you can see that, looking at June, July, August, at 19, 20, 22. Here we are, 26, 25, 22 for September, October, and November. So quite strong, especially when compared to last year when we had 45 days on market, 43 days on market. These are figures that we expect. In fact, we typically expect these to be even a little bit higher than they were there, but still, this is what we would expect these numbers to be going up a little bit, but we're not. They're days on market is still relatively short, under a month for this product type. So still a highly competitive marketplace. And part of that has to do with the amount of inventory we have. I know you've heard me say in the past, we need more inventory. It'd be great to have more inventory because people need homes to live in. And, there's a couple of reasons for it. One has to do with the amount of people migrating to our great city. So that's why we have more people looking for properties. But at the same time, because of interest rates increasing and mortgage rates increasing, we've seen that, not as many move-up buyers are putting their homes up for sale because they're not ready to move up to a higher price point and qualify for more money at that higher mortgage qualification rate. So we're seeing people holding on to their homes as well. So we don't have as much inventory. So that, like I said, it's kind of twofold as to why we have more or why we don't have as much inventory as we really do require. So here's the market distribution. You can see that $500,000 to $600,000 range is the highest amount of buyers in this marketplace. 400 to 500, and then that 3 to 400, followed by that 8 to 900,000. And there are a lot of great semi-detached properties in the inner city and in the west, and in that 7 to 8, and followed by 6 to 900,000, $6 to $700,000 range. Pardon me. All right, so let's look at another part of the market. So now we're going to look at the row or townhouse sector of the market. Again, because we've already talked about listing absorption rate, how that works, we can look at it here. 65.44% listing absorption rate last month. So that's in seller's territory. So we are a seller's market. And that's because there were 267 listings were sold out of the 408 that were available, which is 65.44% of the market. The benchmark price right now is $429,100, and that's up 0.92% from last month. Last month it was $425,200, and year over year it's up. Guys, check this out: 21.04% from November of last year. In last November it was $354,500, and here we are at $429,100. And you can see in this marketplace we've had no little blip going down in September or October. It's just been going up, 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 up from January all the way through to November, and with good reason, because with the interest rate hikes going on and the mortgage rates being higher, this is where several people can qualify more easily in this marketplace. Families are looking for space, so this is the next best solution, as opposed to looking at a more expensive semi-detached or detached home, is looking to the townhouse sector. And here we have the 10-year benchmark price history. So you can see from 2016 to 2020, prices were going down. And we actually had an oversupply in this marketplace for a few years, and even more so in the apartment sector. But then it started to rebound in 2020, in 2022, and in 2023. And it's a very strong market, as you can see. Again, just reinforcing that listing absorption rate: 408 actives, 267 sold in the city last month. So month over month for actives, we're actually up 9.38% from October. Okay, and this is what we would normally expect, is more more properties being available, but maybe not as many buyers at this time of year. Slows down a little bit. Year to date, it's up 6.53% from November of last year as well for numbers of active properties. Now, month to month for sold, down 28.8% from October, which is interesting because we had more listings available. Year to year, the number of solds is up 7.23% from last November. And then we look at the days on market, 22 days on market. Getting to see last November is 35. So we're well below that. So you can see that this is still a competitive marketplace for those places that are selling. And in the market distribution, that $300,000 to $400,000 range, followed by the $400,000 to $500,000 range. Then that $200,000 to $300,000 range, followed by that $600,000 to $700,000 range, and so on and so forth. And let's take a look at apartment condominiums. All right, so looking at this other sector of the market, the listing absorption rate here is 63.72%, which is still in seller's territory. And that's because of as of November 2023, or the end of last month, there were 882 listings available, 562 of those sold, which is 63.72% of the market, giving us this seller's territory, 63.72% listing absorption rate. And looking at the benchmark price for an apartment condominium, it's $320,100. That's up 1.11% from this past October, last month. Year over year, though, it's up 17.81% from November of last year. So very strong. And you can see here, last November, it was $271,700 for a apartment condominium. And here we are at $320,000, roughly $50,000 jump. So that's really saying something. And you can see, we're kind of going down in November, December last year, and then just took off like a rocket January all through the year. So this market has not seen any blips. Now, like the townhouse sector, more so than the townhouse sector, is we had a huge oversupply of apartment condominiums for several years here. Calgary had some few lean years in our market here, while other major markets were increasing, we were going down. So essentially, as far as the major city goes, our prices were a lot lower than the other major centers, and we weren't prospering as well. So essentially, Calgary's been, here in Calgary, we think prices are getting quite expensive. We're actually playing catch up, and we're actually still very, very affordable when you compare to other major Canadian markets. So guys, major Canadian markets. So we're talking about Toronto, Vancouver, that sort of thing, right? So you can see here, 2021, 2022, and 2023 prices have increased in this marketplace. In fact, apartment condominiums are the highest they've ever been in terms of pricing in the city. And here we are again, 882 actives, 562 sold, giving us that listing absorption rate. The number of properties for sale or active month to month is down almost 7% from last month. Year over year, it's down just 0.56% from last November. The number of solds month to month is down 12.32% from last month. Year over year, though, check this out, guys. Isn't this something? Year over year, the number of sales is up 25.45% from last November. So isn't that telling? Again, we just see that people are turning to this sector of the market because there's more affordability here. So the people that would normally be buying those townhomes, because they've been increasing and there's more competition, families are buying those. Now we see people that would normally buy those looking to the apartment condominiums to buy those. So because, again, affordability. Days on market, average days on market, 29 days, which is the same as last month, comparable to September and August, even July and June, all the way through. So last year, pardon me, you can see it's 47 days. Here we are, 29 days. So this is still a very competitive marketplace, below a month to sell a property, average days on market. Okay, and the market distribution, that $200,000 to $300,000 range being the most affordable for buyers. So you can see that that's where the highest number of sales took place last month, followed by $300,000 to $400,000 range, and then that under $200,000, followed by that $400,000 to $500,000 range, and then the people that were kind of in this market, this $400,000 to $500,000 range, are probably, deciding to maybe look towards the townhouse sector. So guys, normally I would break down the sectors of the city. There's 8 sectors of the city, and briefly talk about each sector and the pricing we're seeing there. I'm not going to do that today. I'm going to leave this as is. If you want to see that, I have a newsletter. Feel free to reach out to me, and I can, attach you onto that newsletter that I send out monthly, so you can see what's going on in Calgary and also click on the stats. Likewise, if you are missing seeing those 8 sectors that the city explained to you, feel free to leave a comment in the comments here. I'm happy to talk about that to you as well. And again, remarkable at this time of year that we're seeing prices continuing to climb. Even though it is the winter months, we are seeing some signs of what we would normally see in winter, with slowdowns in numbers, although you can see they're not slowing down anywhere near what we would normally see in a city at this time of year. And our prices in all marketplaces are either stable or increasing in value.
So like I said, guys, if you are considering a move to Calgary or one of the bedroom communities and you would like some assistance to purchase a home, my information is below. Send me a text, an email, or a phone call. I will happily get back to you so you can start living your life in Calgary, Alberta.